Buzzcast.
Hello and welcome to the Nacha Payment Innovation Alliance Buzzcast. My name is Mark Dixon and I am a senior consultant with Nacha Consulting. And I also serve as a team lead for the Navigating Through Digital Payments project team. And there we have a big focus on cryptocurrency as well as other digital type of payment transactions that are impacting the payments landscape. And that does include stablecoins. With me today are Becky Reed, Chief Operating Officer, and Liz Wininger, EVP of Growth and Innovation of BankSocial. To start, Becky and Liz, could you just do a quick introduction for the audience?
Hi, everybody. I'm Becky Reed. I am a 30-year credit union veteran. I'm a former credit union CEO. I've been in that seat a few times in my career. And in 2023, I moved over to BankSocial. Now, there's a big story in between there that we'll talk about a little bit later on how I made that move. But it really was because of the changes I'm seeing in the market. So, credit union to fintech.
And I'm Liz Wininger, EVP of Growth and Innovation here at BankSocial. Nacha, thank you so much for having us. I come from the QSO space where I've been in the industry for about 15 years. I'm one of the families of credit union people. So we have credit union people all over the place in our family. But what I get to do here at BankSocial is work on how we translate what we're doing today to our credit unions and bringing that experience of working with 400 credit unions across the country over to BankSocial, which has been a really fun move for me. And I just came over this past May.
Well, thank you both. We're really excited to have you here. And to start, let's dive into that story, Becky. So you did work for a credit union. You led a credit union that was a leader in this stablecoin space. Can you tell us that story a little bit? And can you tell us about how did that come about and, what kind of drove the decisions for your institution to be a leader in that stablecoin space?
Yeah, absolutely. So I was am a very technology focused person. And at my credit union back in 2015, I was leading that institution through a complete technology overhaul from a networking perspective. And I discovered distributed ledger technology or blockchain technology back in 2015. And I was really looking at Bitcoin, not as an investment, but I really saw Bitcoin as a disruption to traditional payments. And coming from a financial institution, I understood how painful payments were and the ability for a consumer to send a digital asset, any digital asset, it doesn't have to be Bitcoin, it could be a stable coin, from one person to another, anywhere in the world, 24 by 7 by 365, without a financial institution intermediary. I knew that that was game changing. That was game changing for people, but it was also a disruptive game changer for financial institutions. And so I really started diving into that technology and understanding it. And when I met John Wingate in 2022, January of 2022, he and I very closely aligned on where we saw this moving. So he was on the DeFi side of the house. I was on the TradFi side of the house. And we came together and said, this is really the future. And credit unions, we felt like were kind of the place for it to start. And so my financial institution implemented a minimal viable product, MVP, or a POC, proof of concept, with a digital asset exchange and a stablecoin, where my financial institution held the dollars backing the stablecoin. So pre-Genius Act, we were actually more than Genius Act compliant. We both felt, John and I both felt, that a stablecoin should be backed by dollars sitting in an insured and regulated financial institution and not put into US Treasuries, which, yes, the yield is higher. So the stablecoin issuer can make more money potentially, but they're not immediately liquid. They're short-term liquid. But when you have a stablecoin that needs to be turned back into fiat instantly, we felt it was very important to have those funds very liquid sitting in financial institution accounts. And so that's what we did. At my credit union, we launched the digital asset exchange to our members as a POC and the stablecoin. So my financial institution didn't issue the stablecoin. we held the stablecoin deposits, and the issuer actually issued the tokens. And so, yeah, way back in 2022, before people even knew what the heck a stablecoin was.
Yeah, when we just all said crypto.
Right.
So that's interesting. So were you actually trying to solve a member need then? And did you have any use cases in mind?
At the time, look, customers don't come into a financial institution and say, I want Fed now. They don't do that, right? What they do is they tell you what they want with their behavior. And so what we were seeing in our transaction data was there was tons of deposits going out to Coinbase, to Kraken.com, to Venmo, to Cash App. And so we knew our members were utilizing these things, and those deposits were not coming back in. They were only going out. And so when the CFPB back in 2020 came out and said, hey, your overdraft fees are probably too high. And in order to justify what you were charging, if you provided overdraft services to your customers, was how much is it actually costing you to process an overdraft? And what are you charging in relation to that? And so we did a study at my credit union. And of course, coming from the credit union space, I know firsthand how painful processing payments is every single day. It is a very labor intensive process. You have to work exceptions. You have to deal with fraud. You have to deal with multiple vendors that are doing different pieces of the payments ecosystem. And so we did our study and we found that 25% of our operating expenses were tied up in payments in some way. And that includes the fraud losses that we were taking and the chargebacks we were having to work and the technology costs from, our core costs or our different vendors that were providing things. And that was really an eye opener for me. So number one, our members were sending money out to places where they could spend it and use it, not through my financial institution. So that was a little scary. And then secondly, payments were astronomically expensive. There has to be a better way. And so was there a use case? Yes. It was more about creating that financial ecosystem and plumbing, so to speak, to make sure that when these things really took off, which we knew that they would, our members would be able to utilize them through our financial institution and not have to go to a third party like Coinbase.
So I think that's an interesting segue into the next chapter in your story, which was BankSocial. So can you tell the audience a little bit about what brought you to the vision of BankSocial as a co-founder, and kind of what were you thinking about when you and John got together and said we want to form this and be a game changer for the industry?
Interestingly enough, when John and I met, John wanted to start a credit union, and he came from the crypto side of the house. So crypto guy, credit union girl is kind of a story that we like to tell. But we both came to the same conclusion from different places. We really felt like financial institutions, traditional financial institutions, starting with credit unions, really were the place where consumers were going to be able to utilize this technology in a safe way. And so when we met and we immediately recognized that we were kind of on the same path, the same trajectory, had the same thought process. And then we said, all right, we're thinking the same things. Now, instead of creating one financial institution that does all of this stuff, why don't we create a company that helps all financial institutions implement this technology? And so that's where we started. And of course, we started with my credit union for the MVP product, right? Can we actually do this? And is this something that people will actually use? And so that really was the foundational beginnings of why BankSocial got started. Now, John already had the idea. He'd already formed the company. But when he met me, we kind of took a little bit of a different trajectory. Instead of just being one financial institution, doing it for everyone.
That's really cool and really interesting. And Liz, I'm kind of curious about BankSocial today. So, Becky did a great job of setting up like this vision and kind of where the company came from. But what is BankSocial focused on today? And you guys are more than just stablecoin, right? You're actually playing in a lot of different spaces.
Yeah, I think the story really is a multi-rail strategy for credit unions. It's not a single rail replacement. Stablecoins should sit alongside of ACH, RTP, FedNow. And what we're seeing in the marketplace is just quite a bit of confusion, kind of that we don't know. So, based on when you don't know something, everybody reacts a little bit different way. And so it's really their appetite for maybe the unknown. We talk about risk appetite, but there is an appetite for the unknown. And we saw that happen when people started getting websites or people started getting digital banking platforms or, the mobile app became, oh my gosh, do we need to have a mobile app? So that's where we're at today, but with something that is much more influential and going to take these credit unions or not take these credit unions into this next space. So a lot of our work with credit unions is from cradle to grave, starting with an analysis of where they sit today. Do we need to work with the board? Do we need to work with the executive team all the way through the organizations to really understand how this will apply to their credit union and to their members? Or are they at a point where they really understand this and we're just talking about infrastructure and the technology side? So it's all the way through, but a lot of it is education and then going from there. So that's where, and our platform is very broad, and so it allows us to be able to bring in applications for the credit unions that they're currently seeing as disparate systems. And that is creating vendor sprawl. And we saw a couple of years ago where it was like we wanted to have these single point solutions. We want to have just one application that really focuses on one thing. Well, that's really created a lot of problem with integration. And so we're bringing all of that into one spot for the credit union, kind of that single pane of glass with all the resources that they would need, from fraud to AI to compliance to the Robinhood experience to the Venmo experience. It's really, we call it the infrastructure or the orchestration of these tools that they need in order to step into this new environment.
Well, and I think that opens up a good question of, what about resources for these clients? So like when they're coming to you and they're like, we're really interested, we're excited about the solution. What is the lift on their side? And what are, the resource considerations that they need to be thinking about if they want to implement a solution like yours?
It would be naive of us to say that it is no lift, and that's the beauty of what BankSocial brings to the table, because we have a team that has experienced this. We have Becky, who has come from the credit union space, and she's heard the baloney that comes from vendors who are saying, oh, it's no lift. I come from the QSO space where I'm very closely tied together with the credit unions and I'm trying to solve those problems. And John coming from the payment space. So there is always going to be a lift. There's always an impact on your organization. And what we try to do is make sure that impact is mitigated as much as possible. So we try to lower it. And to do so, we bring education that credit unions can place on their website. We walk them through actual education for their team. And then we also have an internal team that takes on customer support for the credit union, because a lot of these member questions, while credit unions have the universal teller, the universal agent, it's just a step beyond that. And so we have that support system in place at BankSocial for them. So those questions actually come to our team. We have a risk and compliance team. We have a team that handles security and AI tools that are built into that. And we like to talk about human-powered AI because we leverage AI alongside the human, and it becomes this really powerful flywheel that can speak to one another. The human can have that experience of, this just isn't working right. There's something sticky in this experience. So we can change it for not only the member, but also the credit union who's leveraging the tool as well. So we really try to make it a low lift for the credit unions, but we also understand that it is a lift. So we're trying to give them all the tools they need to not only bring it into the organization, but support it long term from all of the stakeholders that are involved.
Yeah, and I think that brings up a lot of really good points. And I appreciate the candidness where, there is a lift. Anytime you're deploying technology, there's going to be considerations, there's going to be, bumps in the road, there's going to be things that the institutions have to think about. So it is naive to say everything's going to be seamless and easy. But Along that line, Becky, thinking about the MVP and how you guys deployed stablecoin at the credit union, what advice would you have from like an integration perspective? So as you're integrating a stablecoin solution into an existing financial institution environment, what should those institutions be thinking about? And like, what is the operational impact?
Yeah, we have a saying here at BankSocial, and it's think big, start small. And anytime you're implementing something that is newer, not only newer to the market, but something that the credit union has never done before, I think it's really important to start small. You need to make sure that you're doing all of your due diligence. Your regulators and your examiners, your auditors, they're going to come in and they're going to ask you questions. So please, please, please understand what it is you're implementing, do a risk assessment, and be able to answer those questions confidently without having to refer to the vendor. So if you have a very deep understanding of why you're doing what you're doing and what you're doing, and you start small. So many of us say, well, we're not going to do a solution at all unless it's completely integrated into our core and digital banking. Now, BankSocial today takes care of all of that, right? We're integrated into your core, we integrate into your digital banking, we provide that really awesome user experience for your customers or your members. However, when we started back at my credit union, we started with an MVP and a proof of concept. And I think credit unions and banks miss the boat a little bit on that. Sometimes they want to go all the way to the end when you can just start very slow and say, okay, let's do this one piece first. And then we can start growing into, because there's an expense when you integrate it into your digital banking or your core, there's an expense there, and that's a cost to you. And when you're not really sure it's going to be used or it's going to work very well, or you don't understand, there's some regulatory ambiguity around it, maybe you don't want to have those sunk costs in the beginning. And so you dip your toe in the water and you start slow. And that's something that I think Bank Social, as we have gone through our journey, we've worked with our financial institutions specifically to do that, right? We start with something minimal, and then we move into the broader perspective. And what we do at Bank Social, and Liz mentioned this earlier, is we're not just one single solution. So many financial institutions for payments, let's talk about payments specifically, they might have 25 or 30, or even we've even seen up to 100 particular vendors that deal with different pieces of the payments ecosystem. And that makes the end user experience not a great one a lot of times because it feels disjointed. It doesn't feel cohesive. And so what we do at Bank Social is we provide that infrastructure where a financial institution can start small but think big. So we can start in one particular area, providing a digital wallet, for example, so your members or your customers can buy crypto and stocks. That's the Robinhood experience. They're probably already doing it today. They're going to prefer to do it in their financial institution. That's definitely what we've seen. We take care of all the API integrations. We take care of it, any core integrations that need to happen. We'll work with your team to make that happen. And then we really start working with the financial institution in the testing. That's really where the rubber meets the road. Is that what your members or your customers are expecting? And so think big, start small, and we take care of the rest.
Well, and I love to hear the full integration piece of it because that tends to be a huge challenge in the financial services space, which I'm sure you're well aware of. All these institutions that have these, disjointed systems, or they have to pay expensive integration costs in order to leverage more innovative solutions. So it's really cool that you're really trying to solve for that particular challenge in the payment side. Liz, as a follow up to that, do you want to expand a little bit more on like the strategy and innovation of Bank Social regarding integrations and kind of where you're taking the company moving forward?
So from integrations perspective, core agnostic, digital banking agnostic, like Becky said, I'm going to echo some of the points that she had made. It's really that connection to digital banking and connection to the core. So we have all of that built in to the platform. We even have a product that is an API product. So we've productized that so that we can help the credit unions go to market a little bit easier, a little bit faster. Because again, what we see often in credit union land or banking land is what's the size of the institution? What's the size? You're always asked, what's the size of the institution? And it's such a unfortunate question that we ask sometimes because it's really about what the approach is from the credit union. And it really rules out because you build businesses, you build your business, your QSO sometimes can be built around size of institution versus access to whatever it is that we need to get going for our entire communities, because we forget that it's really about our communities getting access to faster, cheaper, and more transparent money movement. So it's not what we're trying to think about here is it's not about, and I know I emphasized education earlier, it's education in terms of understanding to our credit unions, but to our members, it's really, if we're doing our job, technology disappears and it's just moving faster. We're not talking wires. We're not having to educate on P2P or all the words that we have. We're just saying money gets from A to B all over the world, banked or unbanked, and it does it faster, cheaper, and more transparent. So I don't know if I totally answered your question on that one. Becky, do you have something to, probably a few things to add there?
No, I think you covered it. Yes, core agnostic, digital banking agnostic, and we can work with anyone. And you're absolutely right. We can work with a $25 million financial institution to a $25 billion financial institution. And that Motel 6 thing, will leave the light on for you. That's what we do.
Well, and I think you both raised some really good points, and I see it on the consulting side of Nacha Consulting as well. Like when you're working with an institution, they're all individualized, and all the strategies, risk tolerance, market strategy, it's always different. So even an institution that seemingly on the surface looks the same as another, their entire structure could be different because they have different focuses. And Liz, one of the things that you brought up that I thought is great is that financial inclusion piece, because that comes up a ton when, especially when we're talking about like the legitimization of stablecoins, being able to create networks that connect people that are underbanked or unbanked, communities that don't have access. We often forget that even within the United States, there's still communities that have limited technology access, limited financial institution access. Those are real problems that this technology can potentially help solve. So I think those points were really great, and I loved like the visions that you were speaking to. Becky, I want to go back to your comment about bank examiner or bank and credit union examiners and the regulatory considerations. So you talked a little bit about that, but I'm sure our audience would be interested if they're going to deploy a stable coin, what types of questions would you expect them to be asked, and what should they be prepared to answer related to those solution offerings?
Well, just like with anything you implement into your financial institution, right? When the examiners come in, they always ask for a list of what new things you've done over the last year. And they're going to want to see your due diligence. They're going to want to see your risk assessment. They're going to want to understand your risk tolerance at the board level. Even when you're implementing something as new as a stablecoin solution, for example, your board absolutely has to be a part of that. And you should be documenting that you're having discussions with them, whether it be educating them all the way to a strategic plan around it, right? Or a roadmap around it. And so one of the things I say all the time is regardless of if it's emerging technology or something that's tried and true that has been around for a long time, the process for the financial institution should really be the same. You need to do your due diligence. You need to be able to answer questions, look for guidance in digital assets in particular. NCUA has put out guidance on, hey, if you're going to partner with the third party to provide these tools, here's some deeper due diligence that we feel like you need to do. So just follow that checklist and just make sure that you dot your I's and cross your T's. But at the end of the day, if you can speak confidently about why you're doing what you're doing, then the examiners will be satisfied.
So it sounds like it's not really as scary as a lot of participants in the industry might think it
It
is.
is not. It is not, I promise.
So to round out our conversation, Liz, I'm going to start with you on this one. So we have the Genius Act. You guys talked about this earlier too. The Genius Act kind of legitimized the stablecoin space, and now that's what's getting everybody thinking, oh, we could potentially play in this arena now. And we ideally will have the Clarity Act coming into place too, which will give us further clarity into, who are the regulating bodies and what is that going to look like. How is that impacting things at BankSocial, and what are you all thinking about with respect to the Genius Act and Clarity Act and how it shapes the future of the company?
I love this question because I don't know if Becky and John had a are fortune tellers, like they were able to see the future when it comes to genius and clarity. But everything that we have done from the very beginning has been built around the compliance and regulatory environment and security, because that's what we have to have. This is money, right? And so a lot of everything that we have built already aligns with what's going forward. It's just that now we have an act that is important because it signals that stablecoins are moving toward a more defined and regulatory framework. And for financial institutions, that clarity is really important. Otherwise, it just kind of it's kind of sitting out here because there's so much emphasis typically within a financial institution on regulation. And so until that regulation comes about and is real, where do we go with it? So this reduces the uncertainty and it gives boards and regulators more confidence to move forward. And then the Clarity Act really comes in because it's saying who is regulating what and where and how digital assets can be classified. Now, I am going to toss it over to Becky because she speaks on this all day long. It is fun to watch her debate with people around this and just see the magic that can happen. So, Becky, I would love to hear your take on this.
Well, remember that acts that are approved by Congress are laws. And it's really the regulators that interpret and the courts, but the regulators initially who interpret those laws and are providing that applicability of that law in a financial institution through their examination process. And so it's really, really important that financial institutions and fintechs like us stay on top of what the regulators are saying about how this is going to be implemented and how they are going to examine and ask questions around these things. Now, they usually, well, they all do, I think it's actually required, that they put out their interpretation and they ask for comments. And a lot of times, I know that NCUA did, they gave some very specific examples of, hey, here's a question that we're asking. What do you guys think about this? And it's an open comment period. Anybody can comment. And guys, they actually read those comments. I promise you, they read those comments. They really, really do. And so it's important that we participate in that environment. And going back to, did we have a magic um, a ball, a crystal ball, as you said, Liz, or a genie in the bottle that told us the future? No, we absolutely didn't. But we, John and I, have always, always, always believed that consumer financial protection and trust in our financial systems is very, very important to consumers. And we also believe, Mark, to what you were saying, that folks who don't have access to financial tools now have access because there's an internet connection. And just because they haven't been banked in the past doesn't mean they don't deserve financial protection. And so it's very important that these rules, these laws come into play in our marketplace. And now we have kind of that DeFi wild, wild west that happened before. And now we're integrating that into traditional financial ecosystems around the world to allow for better, safer, faster, cheaper, all of those things that Liz talked about. So having regulatory clarity and legal clarity is very, very important. And I'm very happy that the United States is taking the steps that they need to take to make this a permanent infrastructure in our country.
Well, and it's what makes our institutions feel much more confident in the space too. I agree because otherwise it is a little bit too much of the Wild West. Well, thank you both for today's conversation. This has been really great, really fascinating. I just want to give you both an opportunity. Are there any ending thoughts or audience takeaways that you want our listeners to remember? And I'll start with you, Becky.
Well, stablecoin is a buzzword right now, and everybody's talking about stablecoin. But what I want to leave the audience with is it's way more than just stablecoin. We are talking about a new infrastructure on which we are going to do financial activities. I believe in the next decade, all finance will be decentralized finance because the underlying technology is just better. It's kind of like going from paper ledgers to spreadsheets. That's the kind of moment that we are facing right now. It is not scary. It's not that much different than what we're already doing, but it's better and it allows for more financial access for more people. And so as we move into that arena, I would really encourage financial institutions to educate yourselves on what else is out there. Because, yes, stablecoin is something that is a new payment rail. That's an emerging payment thing. We should be paying attention to those things. But your customers or your members cannot use a stablecoin as a payment if you don't have a digital wallet. You've got to get connected to the rails first. So that's my recommendation on where to start.
Yeah, I would say it's not, it's not about replacing what already works and what's already there. All of the rails that are currently there, ACH, RTP, FedNow, they all have a role. This is simply adding a rail to solve speed, cost, global reach, because those rails weren't built to do the things that now the stablecoin can do for us. So the institutions that are going to win aren't going to be the ones that pick one rail. It's going to be the ones that really understand how to orchestrate all of those rails together. So it's about the orchestration of the infrastructure. So that's why you hear us say, get the wallet, understand payments. So a payment strategy is what we really need to be looking at across financial institutions in order to understand how you're going to go to market. What's the member experience? It is so disheartening when I speak to a financial institution who is focused on one rail or one payment style. And really, when you define what that payment style is, you take a step back and you say it's to get money from here to there at a certain amount of time in a certain way. But to the member, none of that matters. I want to get money A to B at this time. So stop trying to define, I guess, some of those things or I guess define those things. Stop trying to use the legacy definitions because all of them are going to have a place and all of them do have a place today. So figure out what that orchestration layer looks like for the financial institution. And thank you.
Well, thank you both. Thank you, Becky. Thank you, Liz. This has been a great episode, really interesting topic, and I think it's one that everybody is really honed in on right now. Thank you to our audience for listening to another episode of the Nacha Payment Innovation Alliance Buzzcast. Stay tuned for future episodes and make sure you check out the other great work that the Payment Innovation Alliance is working on and doing through our different project teams and different initiatives. Thank you to everyone.
Thank you for watching Buzzcasts, a program of Nacha's Payments Innovation Alliance. Buzzcasts are for informational purposes only, and its contents do not constitute legal or financial advice. Opinions expressed are not necessarily the views or positions held by Nacha. All rights reserved.